Welcome to the special edition of CNN Marketplace Middle East from the heart of London. Under the umbrella of the G8 rotating presidency of the industrialized powers, Britain convened a meeting of the Deauville Partnership, named after the French city where it was launched in 2011. The idea is to help Arab states in transition. And while there's political uncertainty and even protests on the streets, some of the Arab states say the major industrialized powers are not doing enough to speed this process along.
Nearly 3 years after the Arab Spring broke out across the Middle East, Europe is out to reboot relations with countries off of its southern flank. But like most geopolitical efforts, this one is being overshadowed by Syria.
I think it adds to the level of uncertainty. Investors don't like conflict, investors don't like uncertainty, but as I say, there's also an impact through trade and through refugees.
The highest-ranking official scheduled to be here, William Hague, the British Foreign Secretary, went off to Paris to join his counterparts on the Syrian framework talks. With the downside risk of Syria economically, private sector investors have hit the pause button on the so-called transitional economies. And this is putting added pressure on unemployment, a key factor behind the Arab Spring.
We have the greatest number of unemployed youth, so we have to attract investors from all over the world. This is our duty as investment institutions, and also I think the duties of the G8 countries.
This meeting is held under the banner of the Deauville Partnership, named after the French city where it was launched at the G8 summit in May 2011. It's part of a broader EU neighborhood policy to stabilize the economies and stem the flow of migration into the European Union. After the Arab Spring, the Deauville Partnership was rolled out with a target of $38 billion by the end of this year. Officials say $23 billion has been delivered so far. The oil-rich Gulf states have been the most generous. The International Monetary Fund is committing nearly $10 billion to 4 countries, but a near $5 billion loan has been stuck in negotiations. The direct aid from the G8 countries has been in short supply, and strategists say it is undermining the leverage for both Europe and the United States in the region.
The needs are huge. Although the international community has committed a great deal, it will need to scale up its help if transition is to be successful.
And there's another big challenge. A lot of the funding being talked about here at the G8 meeting is linked to cuts in food and fuel subsidies and even state wages. With protests still the norm and pressure on youth unemployment, the political will to deliver those cuts is in short supply. One country feeling the direct impact of the Arab Spring is Jordan. From energy blackouts to food shortages, the economy has buckled under the strain of a Syrian refugee crisis. There are both short and long-term implications. I sat down with a leading Jordanian businessman, Mazen Darwazeh of Hikma Pharmaceuticals.
If this drags on and people don't take decisions and they are hesitant in terms of investment, they're hesitant in terms of long-term planning, this is where Jordan will be affected. So if it takes long, we will suffer long as a nation in terms of the indecisiveness of the international community looking at Jordan as an investment hub.
How do you see an end game playing out here? We have some consensus between the U.S. and Russia and a framework, but what's a realistic end game in Syria, would you suggest?
I think what's going on, they're trying to find an exit strategy for the current regime. Because if you look at the Geneva II, it's going to be 2014. The elections of Syria are going to be 2014. So are we witnessing an exit strategy for the current regime in terms of having a new political system in Syria where all the parties will be engaged? And this is where I see a good exit strategy for everyone going forward.
In fact, you looked at Syria as an opportunity. Were you scared off by what you heard on the ground and you decided to put those plans on hold, waiting to see what the future offers?
At that time, we were both. We were looking at, after the due diligence, we found many of the regulatory aspects were not clear by the government. And then there was tension at that time. So this is when we said we should stop and look at and do a pausing process before going back into Syria again.
Now, you're a MENA-based company.
Yes.
You have to have a pretty tough stomach to want to make acquisitions right now. It's not for the faint of heart, shall we say, but you're making acquisitions during a period of very painful economic transition.
These are times for robust companies, for resilient companies to go and invest. We did that investment in Egypt at the beginning of this year. We're expanding our manufacturing platform in Morocco, in Tunisia, in Algeria. We did an acquisition in Sudan. I was in Khartoum 2 days ago. So we look at the MENA on long-term process. The difference between local companies and multinationals is that multinationals, once there's a war, a revolution, they put their expats on a plane and they leave. We were there, we were born there, and we're going to stay there for the next 50 years. So this is where we should invest going forward.
The multilateral institutions and the major G8 countries seem to want more reforms before they put more money on the table. Isn't this a risky strategy where the youth unemployment deepens and the situation spins out of control?
Let them also put their money where their mouth is, because if we want a stable region, we must create job opportunities, we must create job employment, and we must have direct investment in the infrastructure of the Arab world going forward.
Well, we know that the relationship between the UK and the Middle East stretches back centuries, covering both politics and business. But in the last year, Britain has made a charm offensive in the region. We'll look at its impact when Marketplace Middle East continues from London.